Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, June 7th, 2019. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. I am excited to announce that we have launched our new PivotBoss Trading Room. It is our new state-of-the-art trading room that includes 24-hour chat access, push notification trade alerts, live screen share and audio, and also includes my PivotBoss proprietary indicators and tools, in addition to our online on-demand training. That training includes our executive training series and our signature setup series, everything you need to get started and elevating your skills and trading. If you want, go to pivotboss.com/trial offer and get 50% off your first month. Come check it out and let me know if you have any questions about it. I'm very excited about it and looking forward to seeing you in our new trading room. Now let's take a look here at the markets. If you take a look at the ES, this is what we've mentioned over the last week, starting with last Friday. Anytime you close very near the low of the month after an extreme month here, the tendency is to take that month and reject the previous lows and return it back toward the monthly pivot range. We've seen that play out, and it's actually played out much more bullishly than we probably could have expected, but we knew that anytime you have a bounce in a downward trend, the bounce tends to be very, very aggressive. And now we have to see if the market's going to eventually find some rejection and maybe turn back down. This bounce has been so aggressive that it's already taken us back to the midpoint of the previous month's range. That's your previous month's range right now. And after rejecting prices below, we have jumped all the way back to the midpoint of that range. And now we have a shot to even test the 2880 level, which is the midpoint of the key range. So in this zone is about where you would start to expect some sort of selling pressure if it were to enter the picture. If not, we have a major test coming between 2880 and 2900. That's a big time zone there. That's where the change of bias occurred. It's also where the retest occurred, and now price is on its way back toward that zone. Remember, if you look at the larger time frame here, if you go all the way back out, as a matter of fact, what we've been looking at in the trading room is the weekly time frame here. One thing that we're very, very focused on is this large expanding range here. Very, very large expanding range. You have that upper level, this lower level there, and the last time we were up here, we rejected those highs and dropped to these lows. We took out those highs yet again and are now dropping back down, and it's really this level right there, and that's the 2880 level, 2878.5 to be more precise. That's the level really that if price cannot get back above that zone, it could be a very clear indication that we may be headed down again. And how much further do we go? Do we come all the way down and take out these lows here and drop into 2200? That is a key level based off of our large key range here that can take us all the way to that 100% target. We have an LVN down there as well. Those are the types of levels we could see if price cannot really start to get back above 2880 or 2900. If that starts to become a ceiling there, then we may start to work our way back down within this larger range, and there are some major downside targets that could be reached: 2550, 2350, and 2200. So right now, this is going to be very important to see how it plays out from a longer term perspective. Again, this has been a very high volatility type of market situation here, where, you know, again, we've had lots of back and forth, but clearly taking out those highs and failing to stay above them, that is something that we got to look forward to down the road. All right, let's take a look here at the NQ. You'll see with the NQ here, very aggressive bounce as well, but not so aggressive as the ES. We have rallied back toward the upper portion of that channel we've been talking about after bouncing from the lows. We mentioned down here at these lows that we could see a counter trend bounce back toward the upper end of this range. We've seen it. We're now inside the pivot range. We're also inside the trigger zone of the PIMAs in a down sloping market here. So again, are we going to find rejection in this zone? If so, it could easily turn prices down to at least retest the recent lows of 7K, if not perhaps surpass those lows. The big level here is going to be 7,300, even as high as that 7,400 zone. That zone right there is going to be very important to see how the market navigates that area. Again, any weakness here could easily turn prices down. Staying above 7,300 could open up the upside a little bit more, as high as 7,600 before we see another turn. So we're right at a major pivot here. We'll continue to watch this area closely. Let's take a look now at crude oil. You'll see here crude has been very, very bearish. One of the things that we looked at was this narrow range here, this narrow range here, and we could tell that major expansion was coming, and likely to the downside in this case, but we broke down significantly and dropped as low as 50, 60. We're now pulling back, and we're seeing a little bit of rejection above the previous month's close. So far, that blue dotted line has been offered. Prices above it, close back below it. Trades back above it and then closes back below it, hits it here, drops, and now we're seeing more resistance here at the moment. 54 is a very clear level here. If it pushes above 54s, perhaps we have more upside, but again, that 55 LVN has been significant. We've broken down through it and we continue to hold below it. This usually offers an opportunity to sell this market for another round of weakness. As I mentioned before, 49s could be the next target ahead. We've dropped all the way this far, gotten close to these 49s within a point and a half, and now we're sitting about 4 handles away from that level. That could be a very clear target over the next 1 to 3 days if prices cannot establish itself back above 54. So 49 could be the next downside target over the next 1 to 3 days. Taking a look lastly at gold futures, this one has exploded to the upside. Just exploded to the upside. We talked about 1350 being the next target. It's gotten within 11 ticks of that target and then pulled back. We did see price push through the midpoint of yesterday's session, or the recession from the rejection day mid. That's important because even though we had a nice little rejection there, for price to close above that midpoint suggests that there's still more strength ahead to that edge. So while we haven't quite gotten 1350 on the dot just yet, we are very likely to still see that price get taken out. One last thing, up here 1375 is a major long-term level. That's another long-term chart that I've been looking at here, especially in the weekly time frame, where over the last 5 years price has not wanted anything to do with those levels beyond 1375. So even if we do push through right here one final leg, that could finally lead to a rejection that brings us back toward value at 1285. So right now, a little bit more upside perhaps likely ahead for gold, but watch for signs of major rejection between 1360 and 1375. That could lead to at least a snapback to value. All right, that is it for now. We'll see how this develops heading into the last trading day of the week. Good luck, trade well. Be sure to like, share, and subscribe, and have a fantastic weekend. I'll see you in the trading room. Take care.